Okay, so where are we with technology? Remember, in the country now we're having two big conversations in Kenya about the entry of Netflix and also Uber Taxi. So let's get more on this report. I'm joined by Deepak Mishra. We're glad to have him. He's the lead economist with the World Development Report 2016. Thanks so much for making the time.
Thank you, Yoba.
Let's start talking by talking about this report. What are some of the emerging trends that you're seeing? Some notable points out of it.
Yeah, so isn't internet a wonderful thing? In a typical day in the internet, we send 207 billion emails. We watch 8.8 billion YouTube videos, and we do 4.2 billion Google searches. So that's how much information and data is flowing across the internet. But what the normal narrative have been that once you connect everybody to the internet, then wonderful things will happen. We'll get growth, we'll create jobs, we'll have improved service delivery. So what we do in this report is we take a very close look at what actually has happened so far and what's likely to happen in the future, and the result is pretty mixed. So technology has spread very rapidly, but what we call digital dividends, more growth, more jobs and better services, have lagged behind. And there are two reasons for it. One is about digital divide. There's still 60% of the world population who are not connected to the internet. And in Kenya, it's about 40% of the people are not connected. And then second is the analog foundation, things that we do in the physical world are falling, they're lagging behind the speed with which technology is progressing. So there's a race between technology and regulation, between technology and skills, between technology and institutions, and the analog complements are slowly falling behind and technology is moving fast, and that means not everybody can participate in it.
So the gap is widening, even though things are moving fast with the internet and digital connections. That's an interesting point that you mentioned, because the internet is supposed to be great and it's supposed to make our lives easier. Let's talk about how it would do that, and when it doesn't, and why.
Yes.
Yeah.
So when it does and when it, so first thing is, as I said, it can do wonderful things. So let's say internet has created many private benefits, easier communication, wide range of information, new forms of leisure, saving time, people feel more secure because they have internet. There are lots of interesting that's happening, but not everybody, because technology is not neutral in its impact. So some people, people who are more educated, better connected and better off, tend to use technology much better than the other people. So in a sense, what we call technically is that internet is productivity biased. Forms which are more productive are more, it's also more skills biased and also more voice biased. People who already had a lot of voice actually amplify that. So in a sense, internet can amplify and in the process expand the disparities that already existed in the world. That's exactly why those 60% of the people who are not online may not be able to get the full benefits of the internet.
So how do we ensure that no one's left behind as we move forward?
Okay, so clearly that's making everybody connected to the internet is a global priority and an urgent priority. So let me give you some statistics on this. Out of 7.4 billion people, 6 billion people don't have broadband.
Okay.
About 4 billion people don't have internet, 2 billion people don't have a mobile phone, and about 0.5 million people live outside any digital signal.
Right.
So there is a massive gap that we have to overcome. But within each country, including Kenya, there's a gap between people who live in rural and urban areas. So there's a digital gap across geography, across gender, across income, and across age. So this means what we really need to do a very concerted effort, both in terms of bringing new technology. So Silicon Valley is thinking about drones, balloons, white TV, white space, but also lots of policy reform. So we took out 3 policy changes that we can do. More competition in the ICT sector, so more operators, more choices, more this. Second is more public-private partnership, because here we need investment and government is not able to do all the things.
Absolutely.
And the third is more flexible, dynamic and effective regulations.
Okay, that is interesting. I'd like your comment on, where we are in Kenya right now. Netflix is coming in and we're starting to talk about, what nobody wants to hear, regulation of content on the internet. Uber Taxi has come in. And, the traditional taxi operators and, traditional in quotes, are unhappy. They're saying, look, this is unfair advantage. And what concerns many is that we start to talk about, and I think you alluded to this in the beginning, that there's regulation and we're starting to legislate, and we're starting to legislate all of these little things. Doesn't seem like we're able to anticipate it, and then now it's here and we say, oh, wait a minute, let's put in laws that govern this and govern that.
Yes. So digital technology have made regulators' life very difficult.
Yeah.
So is Uber a taxi company or is it a software company?
There you go.
Is mobile money a telecom product or is it a banking sector
service.
product?
Yes.
And I tell you, it's not just regulators in Kenya. From Washington to Beijing to Delhi, they're all struggling to find the right grip because, as I said, the regulations are behind the curve where technology is moving quickly. And so Uber could roll out to 50 or more countries in a period of 5 years. It took 50 years for McDonald's or some of the other multinationals to spread so rapidly. So clearly the regulators have to be a lot more alert and active. And even if the technology is not in the country, they need to start really thinking about it, that when it happens, what kind of regulations we need to do. But clearly Uber, mobile money, and some of these internet companies are starting to expose that the current regulatory regime that we are using to regulate sectors where both online and offline forms are competing is not the optimal. So the optimal level of regulation has to change now that we have a very different ways of doing business. And we believe that perhaps you could lower some of the regulation standard for the analog economy, but also introduce some minimum regulations for the internet company so that you create a more level playing field between the traditional taxi and Uber, between mobile money and the traditional banks.
And you can do this, say, without regulating the internet, because that's a big thing. And now that's considered, a fundamental right.
Human
access to the internet, because it's access to information. And once you start to say, even mention the word regulate and internet in the same sentence.
Yes.
So
absolutely.
Talk about how you would regulate the service without regulating the internet and access to information.
There's actually an intense debate happening at the global level about how do you regulate the global internet.
Right.
So there are two sets of views, and many people who use internet never even think about it. But so there is one set of view which is called multi-stakeholder, that everybody who is involved in the internet should have a say on this. So this would involve government, private sector, civil society, all sorts of people, and technology firms. And there is another view which is called multilateral view, where the governments would be in charge of it. They will consult everybody else, but it will be the government representative who will make decisions on this.
That sounds scary.
Yes, and we talk about it.
Government in control of it?
Yeah, so it's like some people say, like the way we govern the World Bank or the World Trade Organization, should you want to do that with internet? It does sound scary. But there are lots of debate happening, really heated discussion. And recently, about 2 years ago, when the world representatives took a vote, the world was completely split. In fact, most countries in Africa voted for a multilateral way to govern the internet. Kenya was an exception. Kenya voted the multi-stakeholder way. But there is a reason to believe that many countries want to regulate the internet, because they say that internet is going to be like a utility, electricity, airport, and many of those things were not regulated in the beginning. But like the shipping line is a good example, that shippings were never regulated. But as it became a part of the utility, then you start to regulate. So some countries think, because of sociological, historical reason, they want to have more say on the internet, and that's a really heated debate. So we talk about it, and we do feel that the multi-stakeholder model with some changes to what is now could be the right way to go.
All right, outside of the internet specifically, where do you see, and do we have those projections in your report, about technology generally helping? I mean, we're hearing of the first world drone port in Rwanda that will help deliver supplies to some of those far-flung areas, and I mean, and that sounds very interesting, and that happening in Africa. Where do you see Africa in this, technology use, and where that goes?
As we know, Africa is a very diverse continent, and there are very different level of digital transformation that different countries are in Africa. So clearly countries like Kenya, Nigeria, Ghana, South Africa or Egypt, these are countries where things have actually moved pretty rapidly in the last few years. But if you look at overall, most countries in Africa are behind the other middle income and high income countries when it comes to digital adoption by business people and government, but they are making fairly rapid progress. I think there's significant scope for improvement in case of in case of Kenya, but we have to remember that it's not about just the digital adoption.
Yeah.
What we want to talk about is you got to have the right regulation skills and all that. And on that, those tasks are very tough because we want to have a very different kind of labor force by the 21st century labor force, which will be actually approved. So there, Africa has to do a lot of work. But the good thing is, internet can help you to do that. So earlier, to improve your competitiveness, you have to do traditional way of doing things. Now, using internet, you could do online business registration. And so people say you can leapfrog. So you don't have to do the traditional way of doing things. Or you could, earlier you had to impart skills through a different way. The traditional became brought away. Now with mass online courses and other kind of things, it provides a venue to make, accelerate the process of development. So Africa in that sense has no legacy problem. There are not too many people who are trying to oppose new technology, whereas in Europe and others, because there is so much vested interest already built in, that you are facing more resistance.
All right, because Kenya is also launching its laptops program, and that's some good news in terms of what you were saying, imparting knowledge in a different way, just moving away from the traditional. When it works, what can it do? When technology works,
it can be a magic.
Framework, regulation,
So, I mean, to give you a simple example, there's a small, tiny country, Estonia, in Europe, where it takes 20 minutes to file your income tax.
20 minutes?
20 minutes to file your
I want to
income
move
tax.
to Estonia.
I'll give you another example. In Brazil, they allow people to vote online to decide what kind of public investment spending they want to see in the state. Do you want to see a roads or a high school? And people vote, and now they can vote online. In fact, in Estonia, you can vote online for all your elections. So you could be anywhere in the world, and you could vote multiple times until the last vote counts. So 30% people in Estonia votes online, so you don't have to stand in a line. So there are lots of magical stuff that the internet can do, but as I said, but it's not happening. It's not automatic and assured. All the benefits, we have to really work for it. We have to make sure that the regulations are right, the skill sets is there, and that's not easy. So we do think that we had this feeling that internet is going to make things very easy, and we don't need good policy institution. Internet is going to replace those. But what we say in this report is, internet is a good complement to all these analog things, but it can't substitute good policies. You still need good policies and strong institution to take advantage of the internet.
Absolutely, and that's a great way to end our conversation tonight. Thanks very much.
Thank you so much.
Deepak Mishra, who's a lead economist with the World Development Report 2016, Digital Dividends. How do we get ourselves forward? And obviously a very pertinent discussion, not just for Kenya, but for the region. Thanks again.
Thank you so
Deepak.
much.